Hello, thank you for joining us here today to talk a little bit about LRP insurance. My name is Jessica Hamill, and I'm a team leader on the crop insurance team here in the state of Missouri. I'm being joined by Rachel Hudson. Rachel is an assistant vice president out of our Hannibal office, and she also holds the title of the #1 salesperson in the state for 2022, and she's already off to a fantastic start for 2023. So thank you for joining us, Rachel. Rachel and I are just going to kind of have a casual conversation about LRP insurance, similar to what we would have with our producers every day as they ask questions around LRP. So Rachel, just to begin with, what is LRP insurance and why are we hearing more about it?
Thanks, Jessica. And those are two great questions. First off, let's just start. What does LRP stand for? LRP, it stands for Livestock Risk Protection. And it's an insurance product that essentially protects producers against a decline in market prices. This does not serve as a death loss policy for livestock producers, but allows them to set a floor or put a price lock in place to protect their financial investment. With this policy, we have the option to insure fed cattle, feeder cattle, or hogs, are what our options are. And Jessica's going to go into a little bit more of that later on. But Jessica, you mentioned, why are we seeing an increase in participation? Why are we seeing an increase in conversation? And there's really two reasons that we look at that have kind of stemmed this conversation. So the first part is LRP is a crop insurance program that is government subsidized. So prior to 2020, there was a flat 13% subsidy that was pushed into this program. However, in 2020, they increased the subsidy, and now it's anywhere from 35 to 55%. This change in the program alone made it more appealing and affordable for producers to participate in. The really other big reason that we've seen an increase in conversation, especially as we look at the last couple months here, is really just what the cattle market's been doing. Prices have looked better. And so when we're looking at writing livestock risk protection, we want to make sure we're writing it when prices are up, because that means our insurance coverage or our insurance guarantee is a lot better than opposed to if we write when the market's down. And so with the market being up, this has promoted or prompted a lot of producers to call in and just ask about the program. But also I've seen personally a lot more of my customers frequently write it more than they had prior to with the market being a little bit lower. As we talk about really just the world of agriculture in general, you look at the last 10, 20, 30, 40 years, there's always trends and there's always times when the markets are volatile. Obviously, we've been seeing a little bit of that here, really specifically over the last 1 to 2 years with the markets. We've seen a huge increase in input prices, whether we're talking row crop producers or livestock producers. It takes more dollars to raise a crop or produce livestock. And so with that being said, LRP has really served as a vital risk management tool in a lot of our customers' operations in order to just protect them financially if the market were to fall out. So these are really the things that have prompted these conversations, and past that, Jessica, we talk about, when we're setting customers up and they're picking their coverage levels, there's a variety of things that we discuss. How do you, with your customers, pick coverage levels? And then also, as we're looking at, what their coverage is, where are these prices actually coming from?
Yes, Rachel. So we can definitely take a look at that. You mentioned just being able to talk about LRP insurance more and just looking at an increase. It is so crazy to me. When I started, we were writing LRP insurance, but it was with that lower subsidy. And you're right, that increase in subsidy, we have seen a major increase around talking about LRP insurance. So I think that that's just a really, really valid point that you brought up there. So you're right. As we look at what coverage level, Rachel and I are having this discussion every day. So probably the #1 question that we get from producers is, where should I insure on the market, or where are most people insuring at? I would say that there's multiple different ways to look at which level to pick. There's not a right or wrong way, it's just different. So I'll kind of explain not only where the prices come from, but then also how people might pick those coverage levels and why they might pick those. When Rachel and I were discussing this, we really talked about how we usually put a quote in front of somebody whenever we're looking at the different levels and explaining this out. So we were very fortunate that in January of 2022, we were allowed to go live with an online quoter at our FCS website. So that's at www.myfcsfinancial.com. And this quoter updates every day with prices for the LRP products. So I'm just going to go ahead and pull one of those quotes up, and then we can kind of go through column by column so that if you wanted to write LRP insurance in the future, you could kind of pull that up and know what you're looking at through the quoter. So if you pull that up, the first quoter is what type of insurance, or the first column, I'm sorry, is what type of insurance you are looking at insuring. So feeder cattle, fed cattle, or swine are all options on the quoter. The second one is the steers or heifers. So today we'll look at steers. Primarily, the majority of what we write are feeder cattle in steers or heifers. So people will usually split those 50-50 if they've got both on their farm. So we're going to look at steers today, and then we're going to look at the endorsement length. So what this means is how long until you are looking at actually selling those cattle that you're insuring. The expected end value is that next column that we look at. So this number comes off of the CME index. It's not, or the CME, it is not the actual CME, it's a factor off of that. So if you pulled up, the ending prices today, it will likely be a few cents off of that. We typically see it run fairly close, but there is some variation depending on what type of livestock you're insuring, and then how much they're weighing and what weight range they run into. So that is based off of that price, but it likely won't be exact if you go and try to compare them. The next column is the coverage price. So the coverage price is really that price that you're locking in. So the ending value, actual ending value, has to come in lower than the coverage price before you would have a claim with your LRP policy. I tell people to really look at this as your percent that you're insuring or your deductible. So if you insure at a 97% of the expected end value, then you have a 3% deductible that you have to meet before you would have a claim. So the market has to fall that much. I refer to the actual ending value. That is the price that the market is going to come in at the end of the endorsement. So when we hit the end of 13 weeks, that actual ending value is going to come into play there. And I will explain the actual ending value, where all of those come from, here in just a second. I'll finish these two columns first. So the next column is that subsidized cost per hundredweight. So that's really what you're going to pay per 100 pounds of calf that you insure. So if your calf weighs 600 pounds, you're going to take the subsidized cost per hundredweight times 6, and that would give you that price. The last column is that end date. So really what that reflects is, the endorsement length plus today. So if you insure 13 weeks, you're going to go 13 weeks from today, and that end value is going to reflect that date. That is also the date that the actual ending value is set. It does not matter if you sell your cattle before or after that date, they're still going to use the actual ending value on the end date of your policy. So as we look at the actual ending value and where do those numbers come from, that's probably the second most popular question that we get asked, just because it's not exactly off of the board. So when somebody goes and they're following along there, it might not be exact. So that creates some questions. With feeder cattle, the feeder cattle price is the CME feeder cattle reported index multiplied by the price adjustment factor. So that CME feeder cattle index is a 12-state area, and they take sale barns within that 12-state area. We're very fortunate here in the state of Missouri because several of our sale barns actually report into that feeder cattle index. So if you were to sell your cattle on the exact end date, at a sale barn that reports into that feeder cattle index, that's going to be taken into consideration on the actual ending value. So your actual ending value will be closer than if you sold on a different day or at a sale barn, maybe out of state or something along those lines. The fed cattle and swine are based off of the Agriculture Marketing Service 5 area reports. So both of those are fed cattle and swine that are going in to be slaughtered on that day. And so, or during that week, I'm sorry. And so that is also really reflective. If you have fed cattle that are going to slaughter that week, it should be pretty close. So all of those are very producer friendly reports that are used. And so they really just help reflect what we're seeing in our current market, rather than using a board price that could have other factors into play there as well. So, Rachel, we looked at the prices. We kind of looked at how the quoter works on our website. As people look at this, what are some challenges that people face with LRP insurance?
That's a great question. There's a couple different things that we really, or that, I specifically speak with my producers about. The biggest one that I reference first is a time frame. So with LRP, in order to get a policy in place, it's a pretty short time frame. As individuals, whether we've got, kids, families, livestock, whatever it might be, we've all got busy lives that we lead. And so with LRP, we have the time from when the market closes, so 3:30 to 4, let's say on a Monday, until 9 a.m. on a Tuesday to get that policy in place. That's a pretty short time frame. I do want to reference though, so our closing time or getting this policy in place has always been 9 a.m. There has been a change with that here recently, and now it is going to be 8:25. So they have shortened that time frame another 35 minutes in the morning. And so we really just have to be proactive and make sure that we have that policy in place and that it's signed. So with that, so I work out of the Hannibal office and I cover several counties south of Hannibal and several counties north of Hannibal. That can make it challenging for me to meet with a customer between 4 p.m. and 8:25 the next morning. So we utilize a program called DocuSign, which allows producers to utilize an electronic signature. This has streamlined our process for producers as well as agents in getting these endorsements in place. Another thing that we really talk about with LRP is, as I mentioned earlier, it's a government subsidized program. So in order to receive that government subsidy, you have to be compliant at FSA. So you have to have what they call an AD 1026 on file. We do have conversations with customers who don't want to participate in FSA programs, and that's perfectly fine. You can still participate in the LRP program. You just won't receive that government subsidy. So something to keep in mind with that, if you don't have that 35 to 55% subsidy pushed into the program, that price per hundredweight is going to look drastically different if you are not compliant at FSA. Many of our producers go ahead and get an AD 1026 on file if they don't have one. And so that way they can go ahead and receive that subsidy to make it a little more affordable. Another thing that has come up here in the last year, or has been a change to the LRP program in the last year, deals with verifying ownership records. So LRP is not a speculation, and so you have to own the cattle that you're insuring. So with that, if let's say you've put a 13-week endorsement in place and at the end of that endorsement you have a claim, you're going to have to prove that you own those calves. So for me, a lot of my producers, what they do is they'll copy their sale barn tickets and they will send those into the insurance company, and that will work as their ownership records. As Jessica mentioned, maybe you don't end up selling them. We do still have to verify those ownership records. So it might be vet records or some other form of documentation, but we still have to verify the ownership of those calves. Really, the last two things as far as potential challenges would be if the market is limit up or limit down, we don't have the option to put an endorsement in place. And the last thing I want to mention is the options are different from day to day. So let's say you are looking at your options on a Monday afternoon, but you decide, well, I think I'm going to wait till Tuesday. But either way, you're looking at a 13-week endorsement for 850-pound steers. That option may not be available on Tuesday. So we can't guarantee that the same options that were available on Monday are going to be available on Tuesday. So really just something to keep in mind as we're looking at this policy and putting an endorsement in place. Now, Jessica, for every challenge that we've talked about, there's so many benefits that our producers see, and we see that firsthand working with them. Can you tell us a little bit about really the benefits that you see your producer receiving from this program?
Yes, so you're right. There are a lot of benefits to LRP insurance, and I think that's why we just keep seeing the number of endorsements that we write increase from year to year. So I would say before my producers were writing LRP insurance, they were probably doing one of two different things. So they were either hedging on the board or they were self-insuring. So I'm going to relate some of these benefits back to hedging on the board, just to kind of give you an idea of how it might compare to that. So as we look at LRP, one major benefit is that there is no minimum to the number of livestock that you can insure. So if you want to insure one calf, you can do that. If you want to insure, 1,000, you can do that. There's actually a very high maximum with the LRP insurance. So you can do 25,000 head per year of calves, or you can do 750,000 head of swine per year. So those maximums are very high. They fit all sizes of producers. So, from our smaller producers to our larger producers, there's a spot within LRP insurance for every single person that wants to insure. There's also no margin calls. So really you put that floor into place, you get to walk away and forget it. So nobody's going to come back and say, hey, you need to meet this margin. We've got to change it, buy in, buy out. It's just a floor that you set in place and you walk away and forget about it. There's also the flexibility in selling. So Rachel kind of mentioned this a little bit earlier. You can sell 60 days before or any time after the end of your endorsement period. So let's say that we get to the end of the endorsement period and you have insured 50 heifers and you say, prices aren't quite what I wanted them to be. These heifers look really nice. I want to go ahead and breed them. You can do that. You would just need to prove an ownership record of those heifers. So that could be the vet coming out and preg checking them once you breed them. Something along those lines would count as an ownership record. You can also sell 60 days before. So let's say we get into a big market rally and you say, I really think that I could take advantage of this. You can go ahead and sell your cattle. Now, the only thing is your endorsement is still going to end on your end date. So if you make a really good market sell, fantastic, you get to take advantage of that. But also on the flip side of that, if you have a lower price and then the market comes in higher a few days later, you don't get to take advantage of that lower price. So it's still going to settle on the end date to the actual ending value. So, Rachel, as we kind of look at this, we've looked at some challenges, we've looked at some benefits of the policy. I mean, we've kind of talked about the quota a little bit. What if somebody wants to go ahead and get set up? How do they get started on that?
Absolutely. So FCS Financial serves most of the state of Missouri, and so there are branches all across the state. So the biggest thing, if you have questions or concerns, call your local FCS agent. Next thing, I always encourage people that I'm just starting to work with, whether they think they're going to write an endorsement right away or not, is to get an application on file. The big reason I encourage this is because let's say you are going to be selling calves under some type of an entity or an LLC, or maybe let's say you're married with an application, between your name, address, and just other information that we have to gather. It just makes it a lot quicker if we have that application on file. We can go ahead and get that information done any time of day, and then you're in our system. So that way, whenever you call in to write an endorsement, we already have that information done and taken care of and out of the way, and we can focus on the actual endorsement. As I mentioned earlier, we utilize DocuSign, which has really streamlined that process. I know most of the agents in Missouri have been utilizing DocuSign to make it more convenient for producers as well as the agents. so there's no geographical barrier as far as getting a physical signature before 8:25 the next morning. Last but not least, most of my producers that I frequently work with, they know, because we have this quota in place now, they're able to go online, they look at what they want, and they send me a text or give me a call, and they tell me, what exactly they want to insure. So if they're insuring steers, what weight that they want their steers insured at, the length of the endorsement period, so 13 weeks or whatever that might be, and then they're able to look at what coverage price they want and can go ahead and move forward with that. Let me know. I put it in place. I shoot over a DocuSign, and it's a really simple process once all of that is taken care of. So with that, as I mentioned, we have our website, www.myfcsfinancial.com, and you can locate our quoter on that website, as well as your local FCS agent and your office that you would be working with to utilize this program. But with that, Jessica and I really appreciate everybody joining us today, and hopefully you learned something. But again, if you have any questions, please feel free to reach out and call your local agent.
Thank you.